Practice exercise 9-1A. These are the journal entries for the direct write-off method. You will use bad debt expense each time you write an account off. If the account needs to be reinstated, you will reverse the write-off, then you can collect the money. For this method, the bad debt expense account will be used every time there is a write-off. On February 12th, we received $800 from Leo Jorgensen and wrote off the remainder owed, $2,400, as uncollectible. So we debit cash for the amount of cash received. We debit bad debt expense because we're using the direct method for $2,400, and we credit the accounts receivable for the total amount he owed us, which was $3,200. So what we did was we wiped out the receivable. We received some of it in cash and we wrote off $2,400. On May 3rd, it says we reinstated the account of Leo Jorgensen and received a $2,400 cash in full payment. Okay, so what happened is that we got a check in the mail for $2,400 from Mr. Jorgensen. So before we can put that check on our books, we have to reinstate this receivable because here we wiped it off in February 12th. So we would debit accounts receivable for the amount he paid us, and we credit bad debt expense because it's no longer a bad debt expense because he just paid us that money. Then we debit cash and we credit accounts receivable, which is what we would have done originally when we received cash for a receivable. This is the answer to practice exercise 9-1A. Now let's look at 9-2A. 9-2A is the journal entries for the allowance method. The allowance method uses an estimation of future bad debts in a bucket account called Allowance for Doubtful Accounts. You will use this account to write off individual accounts throughout the year. If an account needs to be reinstated, you will reverse the write-off so that you can collect the money. For this method, the bad debt expense account is used only once a year in an adjusting entry. On February 12th, we received $800 from Mr. Jorgensen and wrote off the remainder of $2,400 as uncollectible. So here we debit cash for $800 because we collect cash, but instead of debiting bad debt expense like we did in the direct write-off method, we debit the bucket account called Allowance for Doubtful Accounts for that amount, $2,400, and we credit accounts receivable for the full amount he owed us. On May 3rd, when we get that check in the mail for $2,400, we have to reverse the write-off. So we debit accounts receivable and we credit allowance for doubtful accounts because we're reversing what we did up here for $2,400. Then we debit cash and credit accounts receivable to record Mr. Jorgensen's payment of $2,400.